What is good, everyone? Welcome to today's trade recap of the day. Today is Monday, September 22nd, 2025. I'm going to be going over the one trade I ended up taking. I made $14,700 on the day today. Pretty light on the day, so let's get into it. This was my first trade of the week. I usually do risk a little bit lower on No News Mondays and just overall at all-time max conditions, but yeah, let's get into it. It was a really, really obvious textbook setup. My trade of it was bugging today. I don't know if anybody else's, but this was the trade I took. But yeah, I was trying to move to break even, wasn't moving. I was trying to place my stop loss wasn't placing, trying to place my TP. It was so annoying. But first, let's just get into the P&L. Okay, here's the P&L. Here's a refresh for the pocket watchers. There you go. All right. Let's get into it. So this is going to be a pretty quick trade recap. Really obvious textbook setup. Okay, coming into open, right? Again, just bullish until proven wrong. I really like this whole entire past 2 weeks. I've just been continuing to be bullish because we are at all-time highs. So I'm going to continue looking for longs, okay, until I'm proven otherwise. We have really clear trend line liquidity right here, right? So coming into the morning, I see all of this trend line liquidity, and I see that price is currently displacing higher. Now, we did leave these London lows here and these stacked lows, but I wasn't going to be bearish just because there's a liquidity pool. A lot of you guys think, okay, just because there's a liquidity pool down here, you have to be bearish now, which is just not the case, right? A lot of times price action and NQ can just leave these lows for later, right? So we don't have to trade at these lows now, and you have to be listening to what the market is telling you. If the market is telling you we're going for these highs, right, and for this buy side liquidity, then be bullish until then. If the market is then telling you, no, we're displacing lower towards these lows, okay, then you can look for shorts, right? But be bullish, especially at all-time highs here, until you are proven wrong, okay? So that's what I was looking at because we were displacing at open. We started displacing higher. And then what did? We created a 5-minute bullish for value gap, okay? So at this time, once we create this 5-minute bullish gap, I'm looking for this to get traded into, right? I want to see this get traded into, and this is a great condition. Being why? Because we hit this hourly for value gap here. We were respecting it while we were at this point. I don't know. I hate when NQ does. I hate when it does that. I don't know how to fix that. Whatever. But whatever. We were respecting that hourly gap, and we also swept London highs. So this 5-minute gap was a great condition, meaning that if we displace through this, I could potentially see shorts play out. I wasn't looking for that though, but I was mainly just looking to see this get respected and then get in the high sign for inversion from the manipulation high to the low that hit this gap. Okay, because we had higher draws, right? We had Asia highs, right? We had Asia highs, and then we also had all-time highs, and we had really clear low resistance liquidity, right? And we were just leaving these stacked highs here, right? So I was looking to get in on this. We also had this 15-minute intermediate high right here, and I was looking to get about a 1-to-1 to Asia highs, okay? And I could have held to all-time highs, but again, No News Mondays, sometimes we leave all-time highs, then we create equal highs, and we trade all the way down here and then do bullshit. So I was just looking to get a 1-to-1 on this. So we ended up trading down, hitting this 5-minute bullish gap right there. Once we hit that, we immediately get displacement above it, above this 1-minute for value gap. This is the high sign from inversion from this high to this low that ends up trading into this gap. As you can see, there's a 1-minute. Is there a 2-minute? No. Is there a 3-minute? That's what I'm always checking. So that 1 minute is the highest time frame in this manipulation leg, meaning that once we get a closure above this bearish for value gap, that's your confirmation in that flip in order flow or that continuation in order flow here. And now we should go towards the next draws on liquidity, right? So that's what we end up doing. We end up disrespecting this 1-minute gap. I end up having a break even at the internal high that created this fair value gap right here. So my break even is here. I enter here with the stop loss at this. This was my stop loss because I wanted to see this gap here get respected if we were going to trade down to that. So let's say we decided to then trade down here. I wanted to see this get respected, and I didn't want to see this trading lower. If we ended up doing that, then wouldn't want to be in the trade, okay? So we get the inversion there. That's where I enter longs. I then move my stop loss to break even once we hit that. Okay, then we had the 15-minute intermediate high right there, but I was not really at a 1-to-1, and I was still pretty confident in higher prices, so I was just continuing to hold. And we end up hitting my TP right there. And then we do have that external buy side being all-time highs, which I definitely can see getting hit, and I think it did get hit. No, but see, we left equal highs, so it's I'm telling you, I usually have my TP above all time, above the actual what's it called, liquidity pool. So that would have killed me. But But yeah, that's that. Got my piece of the pie for the day. Again, really simple continuation model. I feel like I'm going to get questions about two things. One, I'm probably going to get asked, why didn't you like break even once we hit this internal high on ES, right? So we did have a bearish SMT in play. Why do I have XRP there? Right, so we did have a bearish SMT at this point. And I know we get asked, why didn't you move your stop loss to break even once ES hit this? Okay, so I talk about this a lot in my trade recaps, but I am not going to be bearish, and I do not care about internal SMTs if they are not at my intended draw on liquidity, right? So my intended draw on liquidity is this intermediate high here and Asia highs and all-time highs, right? That's like my external draw. Not until these get ran on ES, I'm going to be like moving my stop loss to break even or flipping my bias, or not even flipping my bias if ES takes this, but more so reevaluating my bias, right? I'm not going to be doing that until I see ES run all these highs, right? Until then, if we just get some little internal SMT here, I do not care about this internal SMT, right? Because my draws on liquidity are higher than that, right? So this 1 minute SMT does not hold any weight. It doesn't mean anything, right? In the grand scheme of things, my bias is simply higher, right? And if we look at this, we still have London highs here. We still have Asia highs here, right? ES is still drawing towards this high. It was still drawing towards here, all these highs, right? So bullish until proven wrong. And that's something that you guys have to understand, is just because there is an SMT. And at this point, there was an SMT, right? There was a bearish SMT with what? London highs at this point, right? If we go back here, there was that bearish SMT with London highs because ES didn't take it. But is there any confirmation that we are bearish after that? No, we end up trading lower. We respected bullish fair rally gaps, and then we disrespected the bearish gap, right? So at that point, that's your confirmation that price is still bullish, right? This is not a sign in bearish order flow. You will never see gaps like this get ran and have 5-minute fair rally gaps like this hold when we are bearish, right? This is a clear sign in bullish order flow and a clear sign that this external, not really external, but like this London highs SMT is not going to hold, right? It doesn't hold any weight, okay? So that's why, as much as you have to be like having prediction on the market and where it's going to go, you have to be reacting to it and saying, okay, like, is this really a sign in bearish order flow? No, this is a clear sign in bullish order flow, meaning that this SMT is not going to hold. And then meaning that this internal SMT also has no weight, right? There's SMTs forming all the time. You just have to see where, if we are reacting to it, is it in a higher time frame key level? Okay, if it is, see if we are respecting bullish order flow or disrespecting bearish. And then also just see simply, just how the market is reacting towards it, all right? And if there are higher draws or lower draws, depending on where the SMT is, okay? But yeah, that's that. I feel like I got another question because I remember reading another question. Yeah, that was pretty much that. My boy from the PV Trading Challenge said he didn't take it because of the end log and the 1 hour bearish gap. But yeah, that's also a thing, right? Fair value gaps like this, guys, really don't matter because the draw on liquidity is higher, right? Does that make sense, guys? Like higher time frame order flow, and order flow, when you have a clear draw higher, holds so much more weight than PD arrays. Okay, so it's always going to be, for me, draw on liquidity first, meaning all-time highs, and then PD arrays second, meaning, okay, then I'll look at, the fair value gaps. But I'm only really looking at the fair value gaps that are going to take me to my draw on liquidity, meaning what? Meaning the gaps that get created here. And I'm not going to be caring about these random fair value gaps to the left of me here because these hold no weight, right? Because this doesn't mean anything for my intended draw on liquidity because my draw on liquidity is higher. So I know that this is most likely going to get ran through, right? So that's just something, because I see a lot of people just overthink bias and overthink their entries, and it's common with ICT concepts, right? ICT concepts is really like it's a lot. There's a lot that goes into ICT concepts, right? So I see it all the time with people overthinking their trades, because ICT concepts are everywhere. You can form a narrative for bearish the same way you can form a narrative for bullish, right? But it's just about what holds more weight here, and it's always going to be draw on liquidity. So focus on the draws on the fair value gaps and the PD arrays that are going to take you to that draw, again, rather than those fair value gaps and PD arrays that aren't, because these don't matter. Okay. And that's pretty much it. I'm pretty sure That's probably all the questions I'm going to get asked. So hopefully I answered all those. But yeah, hopefully you guys enjoyed this trade recap of the day. Great start to the week. I'm on a really good winning streak right now, so hopefully I can keep that up. Hopefully we can keep cooking. I mean, my model just presents itself, and I'll take it, right? This is an A+ textbook setup. I would take this 10 out of 10 times. Even if this shit would have failed, I would have taken, I would still take this any day of the week, right? Very obvious setup, very obvious trade. That being said, if you guys want to start copying your trades, use TradeSyncer. That's what I use to copy all my trades. Use code PB for that. And then also, if you guys want to get any sort of accounts, Alpha Futures, code PB Trading for that. And then also, I have 20 of my accounts I'm working with right now are with Apex. So if you guys want to use any Apex accounts, link is in the description for that. And that being said, thank you guys for watching, and I'll see you guys tomorrow. My model video is going to be dropping, I think, Sunday of this week. So stay tuned for that, and I'll see you guys probably tomorrow. Peace out, guys.